Many people dream of retiring a millionaire, but it's not as far-fetched as people may think. In this video, we're going to go over the numbers of investing $100 into this one ETF, QQQI, and how long it's going to take to hit $1 million. And we're going to be using QQQI because it is personally one of my favorite ETFs. So lately, it's the NEO's NASDAQ 100 High Income ETF. It's received the Best New Active ETF from ETF.com awards for a good reason. And let's take a look at this fund briefly. So we can see that it distributes every single month, has a 0.68% expense ratio because this is an actively managed ETF, which is going to have a higher than normal expense ratio than a passively managed ETF such as SCHD or VOO. And we are going to have a distribution rate of around 14%. Very high distribution rate. And one of the best things with this ETF is it's going to be tax efficient because what they're utilizing is a strategy and they're utilizing the NDX index options classified as Section 1256 contracts, which is going to be subject to lower 60/40 tax rates, which means 60% of the distributions are going to be taxed as long-term capital gains and only 40% as short-term capital gains. And that is because it's able to utilize these contracts due to selling options on NDX. So it's going to have that tax efficiency by taking advantage of tax loss harvesting opportunities. And overall, what this fund does is it's going to track the NASDAQ 100, so it's going to own the underlyings of most of those companies inside the NASDAQ, and then it's going to sell options, call options specifically on that index. And one of the great things about this ETF is it's going to utilize both sold and purchased index options, which is going to be a call spread, which may provide the opportunity for upside capture in rising markets, which is very key to have. As we can see, it's recovered very nicely since Liberation Day, which was April 1st. We can see the ETF going from $43 per share all the way to $53 per share, which is something you really want to see in an income ETF. You don't want all the downside risk. You also want some upside potential as well. And we do see that with these NEOS ETFs. And that's why this ETF has been so popular as of lately. It has very stable NAV. It does have declines in the share price because it is tracking the NASDAQ 100, which is known to be a more volatile index. But during markets of recovery, you are going to have that recovery as well, all while paying a 14% distribution rate. Now the question becomes, how long is it going to take to make $1 million? So we have our compound interest calculator here. If we start with $0, we input 30 years saving, and we're going to do a conservative 13% distribution rate because the distribution rate can fluctuate a little bit. So it'll be a little bit conservative and put 13% annualized. And then if we contribute $100 per week, compounded monthly because it pays out monthly distributions, we can see we get about $1.9 million after 30 years. So at what point do we hit the $1 million mark? We can actually see between year 25 and year 26, you will hit that $1 million balance, which is kind of crazy to think about. And if we actually put in that 14% rate of return, which is going to be the distribution rate, and that's not going to take into account any of the share price appreciation that you may receive with this ETF as well. And if it's going to be 14% distribution rate, we're going to be a millionaire by 24 years. Now that may seem like a long time for many people, but time goes by fast, and this is one of the best ways for compound interest to let your money work for you. And keep in mind, all of these numbers are if you are reinvesting your dividends, so you can get that nice compound interest working for you. Now, if we take a look at the total real returns and compare it to SPY and QQQ, we can actually see year to date, it's outperforming SPY by a little bit, but just slightly underperforming QQQ. And that is going to be quite normal during bull markets, because if you just hold the underlyings, those covered call ETFs are going to cap your upside potential a little bit. So it's not going to be as effective as the regular underlying, such as QQQ in this case. Now, if we take a look at the overall returns since January of 2024, which was when QQQI has been released, we can see very similar performance between all three of these ETFs. S&P 500 or SPY is up 35%. The QQQ or NASDAQ 100 index is up 37%, and QQQI is up almost 35% in just a year and a half, which is absolutely amazing to see. And it shows that even though you're not getting much share price appreciation with QQQI, it's only up 7% in share price. Those monthly distributions have really helped with this ETF. And this is an ETF that is going to perform well and actually overperform these other two ETFs during bear markets, because that premium you're receiving from the distributions and the covered calls are going to help cushion your downside a little bit. And that is why many people would feel more comfortable retiring off of an income ETF such as QQQI or even SPY. We can input SPY, which is going to be the same strategy by NEOS, but it's going to be on the S&P 500 index. We can see 10, almost 11% year-to-date total return. Remember, this is all with dividends reinvested, but we can see it's only up 28, almost 29% since January of 2024. So it is underperforming the S&P 500 a little bit. And if we head over to my own portfolio, I have about 115 shares, which is up 6.46% total return. Not actually the total return with distributions, but in share price alone. So my average cost is about $50.30, and it's currently at $53.55. So we have pretty good share price appreciation, and that's not counting all the distributions that we've made. In order to see that, we do have a video that goes over our total return, all the distributions. You can check it out right here. But QQQI has been putting in some serious work. I should probably have dividends reinvested. Right now, I'm just manually adding shares as time goes on. But this is pretty much what you're going to be looking for to become a millionaire off of $100 per week, which is not that much. It's only going to be about $5,000 every single year. And $100 per week is only about $400 per month. And that's pretty much people's electricity bill or utility bill. So it's definitely very doable for some people. But of course, there are risks with this ETF. If we see a big market correction, the share price for QQQI could drop dramatically, but as long as you're reinvesting your dividends, you would be getting more shares at a cheaper cost average. So that's the beauty of monthly dividend ETFs. If the market ends up dropping and you have dividends reinvested, you're going to be able to get more shares because the share price is going to be cheaper. And then when the market does recover, you're going to come out way ahead because you're going to have much more shares than if you just bought and held the ETF without reinvesting. Now, who is this strategy for? How should you play QQQI? If you are a young investor starting in your 20s or your 30s or even 40s, this could be a great ETF to complement your portfolio and become a millionaire. As we mentioned with the calculator, it only takes 25 years at a 14% distribution rate with only $100 contributed every single week. And this is a fund that a lot of people would be comfortable retiring on. I know a lot of people wanted to retire on ULTY, and it's great and fun to kind of see the numbers because it has such a high distribution rate, but we know it's not reliable because of the underlyings. It works well in a very good bull market, but if we take a look at the underlyings, we have very volatile stocks and companies such as Robinhood Markets, we have App11, we have Upstart, we have Unity Software, Coinbase. And a lot of people just don't want to take that risk. Even though it does have multiple companies, it's only 15 to 30 companies inside this ETF. So you're going to be less diversified and have risky speculative companies inside of this ETF, which makes QQQI a much more favorable option. It is much more conservative, only a 14% distribution rate, but it is going to perform really well in my opinion. And Neos has some pretty solid ETFs. They also have their boosted ETF lineup coming out in 2 months, which I'm very excited for. And if we take a look at the history of QQQI, it is very reliable. We can see the dividend history since February 2024. It's been paying about 60 cents every single month. It's ranging between as low as 53 cents per share, which was when the share price dropped quite a bit, all the way up to 63, 64 cents per share, which is very nice to see that it's been very reliable, and I hope it can continue to be reliable in the future. Of course, past performance does not equal future performance, but I do believe that with Neos funds, they've been doing a great job being a little bit more conservative, focusing on NAV stability and paying out consistently, which is making them much more favorable and popular than some of the ETF issuers such as YieldMax and Defiance, where you have a lot of volatility even though you're receiving high distributions. Let me know down in the comments how many shares of QQQI do you own, or if you don't have any, let me know if you plan on owning any or your thoughts overall on some of the Neos funds.